Hi, I'm Aaron Seek, and this is social media's impact on the stock market. For my research question, I chose to talk about how the introduction of social media in everyday life has changed or affected the stock market, and how you can benefit financially from this. I was really motivated by seeing a lot of people on social media starting to become profitable and post their success. That's what originally had gotten me started in the stock market, and I think it would help everybody else if they had a little introduction or something that talked about something they know, social media, and how to use that in something that could benefit you financially, such as stocks. For my experiential project, I used social media to find a stock, and then I tried to make profit off of that stock. I wanted to make sure that everything that I talked about in my presentation was right, so I thought this would be a good way to test whether or not this really worked and whether you could use social media while investing in stocks. Social media is something that has a huge impact over our lives. I'm going to show you a video in a little bit showing you just how much impact it has, but it's definitely something that affects us on the daily and something that almost everybody I know uses, if not everybody. As you guys have seen in the video, social media has a huge impact on our everyday life. I think in this video that was made in 2015, 64% of people that were interviewed said that the internet affects their life in large. This is a huge number. If you think that it's been 6 years since then, that number has definitely grown, and you can see that social media has an impact on our lives, and having an impact on our lives, social media also has an impact on things that are in our lives, such as the stock market. We're going to get into this later, but it's definitely something that has a control over everybody. I think recently, if you have been following the GameStop and Wall Street Bets drama, there's a lot of ways that people use social media and a lot of different ways that they use them in the stock market. But yet again, we'll talk about that later. I know we just talked about social media, but here's a brief video on the stock market.
Through stocks, also known as shares or equities, you basically own a piece of a company. Let's assume Company A has a total of 1 million shares. If you own one share, you basically own 0.0001% of that company. If you own 10,000 shares, you own 1%, and so on. By owning stocks, you can make money in two ways. If the company was profitable last year, those who run it can choose to divide a certain percentage of those profits among all owners. Someone who, for example, owns 1% of a company receives 1% of that money. These rewards are called dividends. If the value of the company goes up, so does the value of each share you own. Maybe because the assets of your company, for example real estate such as physical stores, went up. Perhaps because investors are more optimistic and bid more for its shares. Maybe for other reasons. The stock you paid $1 for last year might be worth $2 today. So you double your money if you were to sell now. However, you can also lose money with stocks. Businesses sometimes even go bankrupt, so you may very well occasionally lose everything you invested.
As you've seen in the video, when you own a stock, you basically own a fraction or a small part of a company. So would a retail investor, or you and me, somebody that's just an everyday today investor, you would be owning a small fraction in the company, and these small fractions make up the whole company. As you can see, like if there are 10,000 shares in a company, you have a 10% part of it, right? If you own 1,000 shares, basically you just own a part or a fraction of a company. There are also things called options. There are shorts and calls. Basically, a short is when you bet on a stock to go down, and if that stock does go down, then you make money. And then a call is just the opposite. There are also initial public offerings, or IPOs. This is when a stock first goes onto the stock market and they're first available to buy or trade. There are also ways to tell whether or not a stock will go up or down. I think it's something that, like, when I was first getting into this stuff, I was confused, like, okay, stocks go up or down, like, how do you know? And basically there are like two strategies you can use to tell you technical and fundamental analysis. I'll show a video of what those two are right now.
Before deciding whether or not to buy or sell stocks, bonds, real estate, and so on, you obviously need to analyze the assets in question. There are two main types of analysis. 1. Technical analysis, which mostly revolves around looking at past price action to figure out what's likely to happen in the future. You look at how the price and sales volume of an asset has evolved over a period of several days, months, or years, and try to spot patterns. 2. Fundamental analysis, which revolves around analyzing economic factors, things like financial statements for companies, debt to GDP ratios for countries, local economic activity for real estate, and so on. Let's assume you're thinking about lending money to Canada by buying its bonds. Applying technical analysis basically means studying charts which tell you how Canadian bond prices have evolved over various timeframes. Fundamental analysis would involve taking a look at Canada's economy, at how its competitiveness evolved, at its economic relationships with various countries, and so on. What about stocks? Well, again, technical analysis revolves around studying price movement charts, whereas fundamental analysis would involve taking a look at the company's market share evolution, the status of its competitors, its financial statements.
As you have seen, there are two types of analysis, technical and fundamental. Right now we're going to talk about technical analysis. So technical analysis basically kind of looks like this. You look at charts, you look at data of a company, how many people are buying their stocks, their options, things like that, to tell whether or not a stock is going to go up or down. Right here, there are patterns that people see, these weird like candlestick things, like there are patterns in those. People they use a bunch of patterns basically to detect whether or not a stock is going to go up or down. And you might think like, well, why do these patterns work? Like how does this work? These patterns work because other people see the patterns and see the same patterns and they buy. Or they sell, and it's just made for like this weird dynamic kind of where there's huge patterns in the stock market that just happen, and it's because of people. But yeah, that's technical analysis. As you guys saw in the video, fundamental analysis is when an investor uses the future projections of a company and not their charts or data basically to tell whether a stock is going to go up or down. If I was looking at Amazon, right, and I wanted to know whether or not the stock would go up or down, I would look at their earnings, revenue, future growth, and profit margins to kind of give me an idea of how healthy the company is and whether or not they're going to do good in their next semester. There are also these things called analyst ratings. Basically, these people that are proven to be good in their callouts of whether a stock is going to go up or down have price targets for the stock to hit. You see somebody thought he was going to go to $3,700 and somebody thought he was going to go to $1,900, right? So there are a lot of different price targets. Nobody actually knows where the stock is going to go, but it's basically just a bunch of people speculating. So when we're looking at social media and the stock market together, we're going to use social media as an indicator that gives us evidence that a stock is going up or down. It's not going to be 100% like a stock is going up or 100% a stock is going down. But if you use this indicator, social media, with others, such as other technical analysis indicators or fundamental analysis indicators, I think it's a good strategy. You see on this graph right here as well that when sentiment goes down online, so does the stock. And it's kind of crazy how it's following the sentiment online. As well as the fact that I think the more time goes on, the more that social media will have a correlation with the stock market. As you see, a lot of more young people are starting to invest in the stock market, such as you or I. I think it's important to know about things like using social media with the stock market, and we'll see how it works in my experiential project. Now we are getting to my experiential project, but there are some examples of how social media has correlation to the stock market. They're cryptocurrencies and stocks. You see Dogecoin here was kind of like a joke on the internet, and then people started to really believe in it, and it started to go up along with GameStop, which you guys have probably already heard of. Like just people are getting together online and pumping up these stocks. And with Dogecoin, you saw more people just get more hyped and hyped about it over time, and it built up a lot of positive public sentiment, and now it's reaching huge numbers. There's another stock, Fisker, which we're going to get into next, that also followed some of the same hype train. There was a lot of positive public sentiment, and we'll see how that worked. Alright, so for my experiential project, as you know, I found a stock on social media. For this, I used Twitter actually, and I bought the stock and tried to become profitable off of it. For this, I found Fisker, as I said. It's a car company out of California, an electric vehicles company, and they were coming onto the stock market via IPO, right? So I did buy the stock and I held it for a long time. It was something that I found out about through social media and then started analyzing it more. And then I went back and used social media again to analyze it, right? And basically there were just a bunch of positive sentiments online. So I bought the stock and I held it for a very long time. During that time, I did buy and sell the stock I bought options with the stock as well. I didn't only just do equity or shares. But yeah. Alright, so as you guys can see, this is a chart for Fisker right now. They're like candlesticks, but just imagine that it's like lines basically going up and down. So I bought in at around $13 and I held on for a pretty long time. I did buy and sell and trade options on it as well, not just shares or equity. But overall, I think I held it for a pretty long time. I think I held it 2 months. I sold in around February or March, so I might have held for 3 to 4 months. But I thought that the stock had gotten to a pretty high price. I had a lot of shares at that point, and the stock ran up one day, and I just sold it off finally. And since then, I have touched the stock a little bit, but I haven't been avidly trading. As you guys can see, this was a very profitable trade. I don't know. I think that everything kind of just collided and it was perfect. It could have just been good luck, but I definitely did see a lot of support for it online. And I think that leads us to believe a little bit that the stock was boosted up online and people were buying it. And when I used people's opinions online, like public sentiment online, I didn't know whether or not it was going to work, but I did see a lot of people saying that they loved the company. The company I looked into, Fisker, was really solid company, and I was excited for what they brought, and it ended up being profitable. So yeah. Alright, so as you guys can see, here's a little bit more data for you. I did have down days, as you can see on the very right. I was down $15. I think I was down like $200 at one point, where I just invested too much and it had hurt me. But it held through the losses. I bought a little bit more when it was down, and it ended up being profitable. During the day as well, I would play, as you see at the very top, there are the patterns as we saw before, and I would buy lower, and then when it reached the top of that line, I would sell it, right? Just basically finding patterns throughout the day so I could get my hands into day trading at that point and, try to minimize my losses. I was up a pretty big amount. This was when I was first starting stocks as well, so this definitely gave me a lot of confidence, which one time did hurt me, but in the end it was good. And as you can see, I was up a pretty big percentage. I held other stocks as well, but Fisker was definitely, I think, the main stock in my portfolio. As you can see, it says 57 shares right there, and everything else I had was like 7 shares, 15 shares, 10 shares. So yeah. Alright, so that's the end of my project. As you saw, I was profitable with Fisker. I learned a lot. I used to think that there was only like one way that worked in the stock market, the way everybody else was using. But I learned through this that there are a lot of different ways that you can be kind of like a trailblazer in the stock market and start using different things. And that goes with real life as well, like you're never ever stuck in one way or one lane. I hope that I gave you guys like a good baseline, like you guys kind of understand the stock market a little bit more. I hope you guys understand the social media thing. I think it's pretty understandable. And if you ever did want to continue learning, you could use these platforms right here. There's Udemy, which is actually a paid platform, but they do give you lessons and courses on stocks. There's YouTube, which you guys know is free. There's literally everything on there. It's crazy. And then a good first place to buy stocks, a broker, is Robinhood. They're pretty simple. It's pretty easy. And I think a lot of people could become more successful. Thank you guys so much for watching my project, and I hope that you guys have a little bit of inspiration to start investing in stocks and maybe using these strategies.